When some people say they are looking for a safe and secured investment, what they really mean is that I want an investment that does not have any form of risk. And that only happens in theory, but not in practice, not in real life. Because every investment you see has its own portion of risk. There's nothing called risk-free investments. It only happens in theory. Because, for instance, when the federal government defaulted by not paying the interest on the due date when they said they were going to pay, which was September 12th of 2024, you saw that people started agitating, they started shouting, but they said that they don't default. They said there's no risk in FGM bonds. The truth is, any form of investment has its own portion of risk. We have two types of risk. One is called systematic risk. Another one is called unsystematic risk. So every investment has these two. But one, you can't control it. That is the one we call the systematic risk. So for instance, you can see that this is a circle. The blue circle represents your investments. This represents your investments. Why the one inside is the risk you cannot control. The unsystematic risk, I will be talking about it in a separate video. But unsystematic risk means the ones you can control. That one is outside your investments. It's under your own control. But this one, there's no way you can control it because it is inherent. It is embedded in that investment that you are investing into. It is embedded in it. For instance, inflation risk is embedded in FGM bonds, treasury bills. There's no way you can wish it away. There's no way you can run away from it because even the government will not give an interest rate that is more than the inflation rates. That's number one. For instance, you may say another one is the credit risk, default risk, such that happened to FGM bonds. Fine, they have paid it, but at least there was a default for a number of days. It should be anticipated in any form of investments. Real estate has its own. You will see some people, they will tell you that there are some investment that hedges against inflation. They have their own. So there's no investment that is 100% risk-free. So you need to come in terms with this. Even in some countries, if you go and study, there are countries that they have failed. The government have failed in paying back the capital of treasury bills. The capital that people invested, we have it in history. So there's no risk-free investments. So even if you are running away that, okay, you don't want inflation risk, you are going to meet another risk in that industry. If you play, for instance, in the real estate, you have the Land Use Act, you can't control that one. You have government policies that can turn things around within 24 hours. Whether positive or negative, sometimes negative, government policies. So there's no risk-free investment. So it is better you know this and you are at peace instead of not investing all because you are looking for a safe and secured investment. The only thing is that you should learn to mitigate your risk. You should learn to avoid some risk. And that's why it's better you start from investment like FGM bonds, treasury bills, because the risk that is embedded in them, that is inherent in them, is minimal. But that they are risk-free is a fallacy. It's a fallacy. They are going to default at times. Even at times, they may delay in paying your capital. Maybe you are expecting your capital on a particular day. It may exceed that particular day. So it should be expected. So let's quickly talk about what is it about this systematic risk, so that you will know that any form of investment you are going into, there are risks that is embedded, that is inherent in that investment. Number one is that it is beyond your control. When the federal government did not pay, it is called the credit default risk. When they did not pay on the 12th, there was nothing the people could do. There was nothing. It was beyond them because it has a lot to do with the DMO, Debt Management Office. So it's beyond your control. And what can you do when something is beyond your control? You just have to accept it. No, that's number one. Number two, it cannot be avoided. You cannot avoid systematic risk. So trying to run from pillar to post, trying to look for a safe and secured investment that is 100% risk-free is more or less like you are just daydreaming. You will never invest. If you are looking for a safe and secured investment, you will never invest. And if you see anybody that is saying that they are 100% risk-free, there is nothing. Even if it is your own business, it is not risk-free. Because something can just happen to the business, something can happen to the product you are selling. They may not be in demand. A competitor who has the economic of scale can just come up. Government policy can just come up and it will affect the business adversely. So there's nothing called risk-free. That's number 2. Number 3 is it affects the whole market. You are not the only one that it will affect. When the federal government did not pay on the September 12 now, was there only one person that was not paid? No. It affected everybody that subscribed to it, that subscribed to that FGM bonds. So it affects the whole market. What's the last one? It cannot be mitigated. You cannot reduce it. It is only systematic. And I'll be talking about it in a separate video. The risk that can be mitigated, the risk that can be reduced. How can we reduce it? And I'll be giving some examples of such risk. For instance, if you are investing in real estate, how can you mitigate your risk? If you are investing in digital assets, how can you mitigate your risk? If you are investing in financial assets, how can you mitigate your risk? If you are investing in corporate bond, how can you mitigate your risk? So I think I've been able to enlighten us that there is no risk-free investments anywhere. Trying to look for a risk-free investment means you have to wait till eternity and you will never invest. Risk is embedded in every form of investments. If you are here to watch this video, I would advise you watch it. It is on risk associated with bonds. Watch it and learn. So we'll meet in our next video. Stay blessed.